Welcome to the James Duerr Show, the Swiss Army knife of your financial planning. Many people know how to make money. Everybody knows how to spend it. But do you know how to manage your money? James Duerr has the heart of a teacher and is a mentor to many. Now you can be mentored by James Duerr. Pull up a chair, your paper and pen, and get ready to learn from the teacher himself, James Duerr.
Good morning. This is James Duerr, and I'm your host of the James Duerr Show and the 7 Steps to Financial Success. Oh, man, it's been a great morning. I have the whole crew here, the technical crew, at 9:30 a.m. here in San Antonio. We're live streaming through all the, I don't have to do it on my computer anymore. It all goes through their system. There's high tech. It's a wonderful system. And I want your comments on it. My hair is out of place probably. My wife says I have terrible hair. Good morning, Pam. So I do want to welcome all my listeners and tell you how much I appreciate you being here, how exciting this is to be able to help the American public be successful in finances. Now, this is a different type of financial show. And this show, if there's only one show you listen to, on the radio or on podcast, one financial show, this is it, because we'll give you common sense, Texas common sense ideas, and we'll explain how to really create wealth with the James Duerr 7 Steps. You can call me this morning at 210-308-8867. That's 210-308-8867. And we've had a lot of calls in, and we want you to call in too. A lot of our calls that we've had are actually were not calls, but people have gone to our website at jamesduerr.com, JamesDuerr.com. They go on to the James Duerr website, and they've sent us an email at money@jamesduerr.com. And we have one question here from Mitch out of Austin, Texas. And Mitch says, I'm 27 and I want term insurance. What should I get? Well, we've gone over this before, Mitch, and I'll be happy to go over that again with you. You have a unique insurance number, and your unique insurance number, what you do is you take all your current debts, say you have credit card debts, say you have mortgage debts. You take all that, you add it up, and then you look at current debt. So for your kids' college or for your retirement, whatever type of expenses you have that you want to have paid for if something would happen to you, you do your current debts, your future debts, and then you add in your income replacement. So your family's going to need that income if you should pass. So you want to have your income replacement also in there. So you have your current debts, your future debts, and your income replacement, and that's how much insurance you should get. And we have a unique insurance number we do, and we'll go through all that with you. Maybe if we have later on a time in the show, we'll do that again for you here. But if you have any questions, send us an email at money@jamesduerr.com. Also, we have another listener. Who is this from? Sandra in San Antonio. And she says, we recently purchased a home and are considering paying down the mortgage. Is that a good idea? Of course, paying down your mortgage is always a good idea, but there's a better way to do it. What you want to do is use step 2 in the James Duerr 7 Steps, which is cash value life insurance. And when you use step 2 and build up cash and cash value life insurance, you can build up your money, compound your money. It builds tax-free, and you take the money out tax-free. So let's say you want to start paying another $500 a month on your mortgage or $200 a month on your mortgage. Well, you can take that same amount of money and you can put it into a cash value life insurance policy. And then when you do that, when you're ready to pay off your mortgage, you take that lump sum and pay it off. Now, the advantage of that is what happens if an extremely attractive business opportunity comes up and you need money. And you've taken all your expendable money and you've taken that and put it into your mortgage. And when you call the bank and you say, hey, I want all that money, additional $50,000, $60,000, $100,000 that I put in there on principal payment only, I want that money back because I got a business I want to start. Well, the bank's going to say no. Okay, they're not going to give, the mortgage company is not going to give you back your money. So why not, put your money into a financial instrument that grows tax-free, that you take the money out tax-free, that for any reason that you can have access to that money. So that's why it's smart. You still have it where you want to build up enough cash to pay off the mortgage within 10 years or 15 years. You never want to go past 15 years on a mortgage, but you want to be able to build up that cash value and then be able to use that whatever you want to. So if you decide later on, yes, I do want to pay off that mortgage, your money is sitting there. You can take that money out, pay off the mortgage. But if something tragic happens, you say you need to have emergency surgery, or you need something, need another car for your child going to college, or you need college expenses, that money is available to you. So that's why step 2, if you go to jamesduerr.com, JamesDuerr, go to the website and you'll see there that, you'll see it. And I'm trying to see myself on Facebook, see if we're okay here, but hopefully we're good. Let's do a little refresh. So what we're trying to do is do smart things with your money. So especially, a lot of people have mortgage rates that are, say they're in the below 4%. And in that case, you definitely, putting your money into something that's going to grow more than that over time is a good way to do it. So let's look at a couple other questions here. We said, here's the one from Gay in Corpus Christi, Texas. I'm 55. When should I apply for long-term care? Apply yesterday. Okay, let me tell you a little bit about long-term care insurance, Gay. And I appreciate the question. It is a very serious question. At age 55, I appreciate you being interested in that. What I've seen in my practice is when people wait for when they retire to get long-term care insurance, then it's too late. A lot of times, 50% of my clients in their 60s are getting turned down for long-term care insurance, or it's too expensive to get. So you want to be the smartest kid on the block. You want to start looking at long-term care insurance in your late 30s, in your 40s, and definitely your 50s. You want to get long-term care insurance and have it in place. My clients who've gotten long-term care insurance early on in life, when you sit down with them and do our annual financial reviews, they're just calm, they're happy. They know that if something happened, there would still be money for their loved one. If you went to a long-term care event, then you wouldn't take up all the money for the family. And I know that for a fact. My mom had Alzheimer's, and she died from Alzheimer's, a terrible disease. But good things happen, or bad things happen to good people. And that happened in our family. It can happen in your family. So I don't want it to happen. I want you to protect your family with long-term care insurance. So, we're on the James Duerr Show, and I am James Duerr, your host. And we're proud to be Texas strong, and in this great city of San Antonio, Texas. And there's a lot of things I want to go over today. But if you do have questions, please don't hesitate to call 210-308-8867, or you can go to our website at jamesduerr.com, JAMESDUERR.com, and ask a question. Our email is money@jamesduerr.com. Let me see if I can catch a quick. Let's don't go into another question. I want to tell you what's coming up. Coming up right after the break, we're going to talk about life insurance. We're talking about legacy building for legacy funding for nonprofits, and we're going to talk about insurability. We're going to talk about how even if you aren't in good health, you can borrow a life and get you insured. And we're going to talk about business insurance too. If you're a business owner, you stay tuned, because we're going to go over critical areas where you can build capital in your business with your human capital. A lot of companies don't do that. You need to do that. So again, a lot of things we're going to cover today. We're going to cover business insurance. We're going to cover borrowing a life if you can't get insurance yourself. And we're going to talk about life insurance for nonprofits. So anybody out there who's on a board of a nonprofit, you're on the staff of a nonprofit, you run a nonprofit, you call me today at 210-308-8867. This is James Duerr and the James Duerr Show.
Looking for your new home? Realty One Group Emerald is your one stop. We are the ones to get you out of your old house and into the new one. Our experienced local real estate agents will simplify the entire process of buying and selling your home. Find your home today at Realty One Group at rogemerald.com. 210-405-4326.
Welcome back. This is James Duerr and the James Duerr Show and the 7 steps to financial security. Now, there's a lot of shows out there, and we're not one of those shows. We're a show that is going to help you manage your money and become wealthy the easy way, okay? There's no magic to the James Duerr 7 steps. The James Duerr 7 steps for creating wealth is tried and tested over years and years. So you're not going to have a problem later in life. You're not going to run out of money in retirement because we're all living longer. We all have much longer longevity. Our health's better, and we're living to our 80s or 90s and beyond. So we want you to enact, to put in place the James Duerr 7 steps of financial success, and you can find those at jamesduerr.com. That's JAMESDUERR.com, and we'll walk you all through it. This is not a path you want to walk down by yourself. You want to have a professional that sits down with you, and I recommend that you sit down with your insurance professional and you sit down with your advisor once a year. Now, if you haven't seen your advisor in a while, you haven't seen your insurance agent in a while, you are what we call an orphan. And as an orphan, I want to adopt you, okay? I want to take care of you. So you contact me. We'll have a professional or myself sit down with you, and we'll just have a conversation for an hour. We have a conversation for 1 hour about your personal goals, your financial goals, and you'll be surprised what comes out of that meeting. Everybody who sits down with me for a short 1 hour session gets a huge benefit. They always find out things about their life, about things that they haven't thought about. And you know, if you do not plan in life, then you don't have any luck. Luck is due to successful planning. So when you plan in life, you succeed, and we want you to succeed in life with the James Duerr 7 steps. So let's talk about a couple of things. Let's talk about life insurance for nonprofits. So you use life insurance and you use cash value life insurance. You can use term also for a nonprofit to build a legacy in terms of dollars, legacy for a nonprofit. So the nonprofit never goes out of business. And you know what? Here in San Antonio, we had a very, very well-known nonprofit that's been around for 50 years, 60 years, I don't know how long, forever since San Antonio's been here. They almost went out of business. They actually dissolved for a while and then came back. And if they would have had a legacy funding in place, that wouldn't have been the case because they were depending on certain funds coming in every year from fundraising. Something happened, nobody's fault. It just happens sometimes. Bad things happen to good people, and they didn't have the funds to continue. So what you do with a nonprofit is you have insurable interest on your board members. So what you can do is you can build up a tremendous amount of cash. on your board members and through life insurance. It's very simple. It's very easy concept, but there are some certain things you gotta worry about. So you need a professional to walk you through this. Somebody who has like a wealth advisor on hand, like an attorney that can advise you. Because I'm not an attorney, I'm not a CPA, but we have attorneys, we have CPAs that we can refer you to that will help you do legacy funding for nonprofits. So let's look at an example. So say you have a board member, and the board member's in their 30s. What you do is they are an insurable interest of the nonprofit, okay? So, and this concept applies to businesses too. So if you're a business owner, you need to listen to this also. So, and you're a business owner, you're probably on some board, but say you have somebody in your 30s, you put a life insurance policy on them, and they actually get a tax benefit from making the payment. So say they want to put another $200 a month or $500 a month for the nonprofit. Well, they can fund a insurance policy, a cash value life insurance policy. They can put that $300 a month or $500 a month instead of doing just having it to the nonprofit just for that moment. They can build a legacy. They can have hundreds of thousands or even millions of dollars, depending on how much their premium is. They can have hundreds of thousands of dollars built up, so when they pass, the nonprofit that they love and they support has money to continue their mission. So if you do not have legacy funding for your nonprofit board members, call me. You can call me direct to my cell, which is 361-442-4811. Again, my cell number, my personal cell number for you out there in San Antonio and all of Texas and all the American listening public, my cell phone number is 361-442-4811. Call me if you want to know more about legacy funding for nonprofits. And that same concept goes for staff too. So your staff can be eligible. And even if your staff member leaves later, the nonprofit is actually, the way we design the programs and design the policies, and the staff member is actually, they give you approval to put your to use their life to further the gains of the nonprofit. And even if that staff member leaves, then you still have that policy on that staff member. So it's great for the nonprofit. It's great for the staff members because they can contribute if they want to, and they can contribute. Actually, still they can contribute tax as a tax deduction, and we'll show you how to do that. So that's life insurance. That is legacy funding for nonprofits. Well, let's talk about borrowing a life. So say I'm not insurable. Say I have, diabetes, high blood pressure, or I'm taking 10 medicines, and I cannot get insurance. But I want to use cash value life insurance because I want to build money for retirement that nobody can ever take. In the great state of Texas, cash value life insurance is creditor protected, just like your homestead. Cash value life insurance can't get it. And I was talking to an attorney earlier this week, and he was saying, they can still get your retirement funds, and that's beyond my realm, but that's what he told me, that your retirement funds, if you get in trouble and you get in big debt, they can still go after that, but they cannot go after cash value life insurance company in the great state of Texas. So say I can't get insurance, my health is too bad, that I can't qualify, or it's too expensive. So what I can do is I actually can put a policy on my son, my granddaughter, my nephew. They're all what we call an insurable interest. And let me give you some numbers from actual examples. Say here we have a individual who's in their 20s, and say I want to, or you want to, put money into a product that's going to be protected. So it's going to be creditor protected, and it's going to grow tax-free. So say I have this policy, and I have this 27-year-old relative that is an insurable interest, and I want to put maybe around $100,000. I want to put, now listen to this. And if you have to go back to jamesduerr.com, JamesDuerr.com, and listen to this podcast. This podcast will be on our website. We do our programs on Saturdays. By Mondays, our excellent production team here puts it on our website, and by Monday you'll see it. But let's say for this example, and this is just an example, okay? This individual put $103,000 into a policy, and they did this over a 5-year period. So every year they put about over $20,000 per year, which may seem like a lot, but if you have $100,000 in the bank, that's losing money, because you're losing money if you're $100,000 because of inflation. It's losing a heck of a lot of money. And I brought, I'll bring that out later, something about how much that would be down to, but you can find it easily, and you can email me and I'll tell you. But this individual, say they put $103,000 in a policy over 5 years. Well, you have full liquidity of that money within 7 to 8 years. So you have 100%, more than 100% of that money after 8 years. So instead of losing money every year with $100,000 in the bank, put that money on a nephew, put that money on your son or daughter, and then you are the owner of the policy. You are the beneficiary. You're everything, okay? He or she is just the insured. But the benefit for the insured is when you're through retirement or you pass, then you can transfer the policy to that individual. So let me show you about this one here. So on this policy, we have an individual who wants to get about $10,000 per year for 20 years. So with this $100,000, this individual can get, I think it's over $200,000 that this person, after they put in $100,000. Now get this. This is amazing. You put in $100,000. When you retire, you start pulling out money, and you pull out, $8,000-9,000 a year, whatever it is. And let's say rough numbers, you would be able, with this policy, with this cash value life insurance policy, you put in $100,000, you take out over $200,000 during retirement. Isn't that great? But then the person you have the policy on, they still have over $100,000 of cash value left over. And then they may have, if you take out, $200,000 and the policy has grown, and this policy, even at just age 65, the death benefit is $1,200,000. Okay, just rough numbers, but $1.2 million from an initial investment of $100,000. And then, so if your son or daughter or nephew or whoever you had this policy on, remember we're talking about borrowing a life. When you borrowed somebody's life, that person benefits, because now, say you took out $200,000, so you would subtract that $200,000 from that $1.2 million, and that the family of your loved one who you put that policy on would still get $1 million. These numbers are amazing. Compound interest, dividends paid, but it's all about having the right company and the right policy. And we will, when you meet with a financial services professional that I've personally have vetted, and I don't care if you're in Indiana or California or Texas or wherever you are, anywhere in the great United States, we can set you up with a financial service professional that can do this exact thing. So if you thought that you couldn't get cash value life insurance and you couldn't use that for your retirement, you couldn't use that for college savings because of your health, you're wrong. You can do it. You just need to call us, and we'll show you how to do that. So that is called borrowing a life, okay? You can still use Step 2, cash value life insurance, as part of your overall 7 steps. No matter what your health is, you can have that in your portfolio. You own it, you benefit, and it's a great, great product. So let's talk about it. Let's talk about the same concept. Let's talk about cash value life insurance. Let's talk about employees right after the break. So after the break, we'll talk about buy-sell agreements. And there's something about buy-sell agreements that everybody always misses. I'm telling you, they always miss, and it's the most critical part. So stay tuned after the break to the James Duerr Show. Again, you can follow us on Facebook Live. Go to the James Duerr Show, 7 Steps for Financial Success. That's the James Duerr Show, 7 Steps for Financial Success. And we're live streaming on Facebook right now. God bless, and we'll talk to you right after the break. And you, if you're a business owner, you hang on. Welcome back to the James Duerr Show and the James Duerr 7 Steps of Financial Success. I am your host, James Duerr, broadcasting from beautiful San Antonio, Texas, right on the KOUP 930 AM The Answer. We're on the top floor. We have a beautiful view of this beautiful day, and I welcome you to the show. This is the most important financial radio show you will ever listen to. This is the 1 hour per week that you need to tune in at 8 a.m. At 9:30 a.m. The Answer. And if you're not an early riser, then on Mondays our podcast will be active on our website. So you just click on the podcast and go from there. So before the break, we were talking about buy-sell agreements and the problem most buy-sell agreements have. So let me talk about buy-sell agreement. So say you have a business and you have multiple owners. Let's make it simple. Let's say you have a business that is a family business. And buy-sell agreements, if you have a family business and you do not have a buy-sell agreement in place, you're asking for trouble. You're asking for family discord. You're asking for fights. You want to have us have us recommend an attorney who understands buy-sell agreements and a CPA. And then what you do is you basically a buy-sell agreement. Say you have 2 family members, and one family member would pass. Okay, so then that family member who passed, who died, his interest or her interest would go to a spouse, or it may go to their kids. Okay, and so the kids or the spouse have 2 options. One option is they own 50% of the business, say, they would get involved in the business. And maybe they have no business sense, so that would be tragic, okay? Or they do nothing. So the second choice is that family member does nothing, does not contribute to the business, and the previous family owner probably did, and they would just sit back and get their money. So you have a buy-sell agreement. So if one of the partners in the business would pass away, you have money available to buy out the other partner. Well, the problem is whenever people set up businesses, they always sit down with their attorney and they have a buy-sell agreement. Everything is written down except for one thing. They do not have a funding mechanism. So if one would pass, then whatever the agreement is, the other partner would have to try to buy out the other owner, or if they couldn't, then that owner gets involved in the business. And sometimes, quite honestly, the spouse, the kids, they can be maybe a little wacko, and you don't want them part of your business, but you don't have the money to buy them out. So what you do, the big mistake people make is they do not have funding, and you can do funding using cash value life insurance policy, or you can use even term policy. The nice thing about cash value policy is if you never use the policy for a buyout, then your business can build up that cash tax-free, and that cash is creditor protected. So, but it's not as simple as it seems. We do need to sit down with you. We do need to have an attorney, a CPA that we recommend that sits down and does it, sits down and correctly puts the agreement for you and states that the life insurance policy will be the funding mechanism. But if you need to go back, You need to look at your buy-sell agreement, see how it's funded. And if it's not funded, give us a call. You go to our website at jamesduerr.com, JAMESDUERR.com, and we'll show you how to use cash value life insurance policy to build wealth for your business, which is creditor protected. And as a business owner, you always have to have creditor protected funds, and then you don't have to worry about that anymore. So I wanted to go to a couple of questions we had that came in. Okay, Mary and Bernie, pretty beautiful Bernie up in north of San Antonio. And so it says, I hear you talk about cash value life insurance, but I do not hear anything about the death benefit. Is there a death benefit? Yes. Cash value life insurance, also known as whole life, also known as permanent insurance, of course, has a death benefit. But why do I talk about it? I never talk about the death benefit. If the worst thing in life happens and you pass, then your family gets the money. I don't talk about it because I look at the financial instrument, which is cash value life insurance. The financial instrument has qualities that no other product has, and because of the flexibility of pulling out money. So cash value life insurance has, one, it grows tax free. So there's not a lot of products out there that grow tax free. Second is you pull the money out tax free. And we can show you how to do that. You need to do that with utilizing loans, and you need to do it the correct way. And our professionals know how to do that. Go to jamesduerr.com, JAMESDUERR.com, and send us an email at money@jamesduerr.com, or give me a call, my direct cell at 361-442-4811. We got lots of time if you want to call us here live at the station at 210-308-8867. That's 308-8867. And we'll try to answer any questions you may have. No question is dumb. No question is too complicated, because we'll find the people who has the answers for you. So, Mary, yes, cash value life insurance has a death benefit just like term life has. And then here's another email from Sarah. Sarah in San Antonio. She has a question on income annuities. Can I buy an income annuity for both me and my husband? Yes. So you can buy two separate income annuities. And remember, income annuities is step 3 on the James Duerr 7 steps. So you want to have guaranteed income for life. We were talking earlier in the show about how everybody's living longer, longevity. That's a good thing. Also could be a bad thing if you outlive your money. And so you want to have safe money set up, and you want to have step 3, which is income annuities. So you want to have at least the amount of money in an income annuity that will pay for all your fixed expenses. And we can sit down with you and determine what's going to be fixed, what the inflation is, how much money you're going to need in retirement. It's like Social Security. An income annuity is like Social Security. It's supposed to be there every month. Now, income annuity from a qualified company that we will visit with you about, that have been in business for over 150 years and does not have any stock members. They're mutual insurance companies. They have the policies that you can feel comfortable that they will be there in the future, in the next 100 years, next 50 years, or whatever. So an income annuity, let's say you need, and I was getting back to, like Social Security. Yeah, you have Social Security. That's like an income annuity, okay? But the government controls it. The government may change the rules, and the government may not have that money. So it's a good thing and a bad thing. The U.S. government now is looking at the ability to have income annuities as part of 401ks. That's the good news. The bad news is the government is looking into having 401ks and the ability of income annuities. So we don't want the government in it. You want to have a policy that's is not controlled by the government. So you can use qualified money, which is a great idea. I mean, you want to take some of your money out of the market right now, and you want to, invest that in the income annuity while the market is up. And we'll talk about that in a second. But let's get back to Sarah's question here in San Antonio about income annuities. Can I buy an income annuity for both me and my husband? The answer is yes. But you can also have just one income annuity that is that you can just have one, and then if you would pass, it would go to your spouse. So you can set up one income annuity that can take care of both of you, or you can set up separate income annuities, whatever you feel your passion for. So very good question, Sarah. I appreciate it. Let's go. We've answered enough questions right now. Let's talk about insurability. So we were talking about, who is insurable? Who can you put an insurance policy on? Now, a relative, you can put an insurance policy on a husband or wife. And this is if you don't have the health to be able to get a policy yourself. And you want to be able to take advantage of a cash value life insurance for saving for college or saving for retirement. So insurability means you have a link to them, a legal link. So they could be a grandson, they could be a son, a daughter, a wife, a husband. You have an insurable interest in that person, but you can also have an insurable interest on a business owner or on a key employee. So insurability is something that you want to make sure that they're insurable interests before you go down this road, and we can help you with that. So if you're a business owner, again, if you're a nonprofit, or if you have grandkids and you want them to take care of at the same time, enhance your retirement fund, then you want to contact us at the James Duerr Show. That's JamesDuerr.com, and the 7 steps to create a successful financial life. We look forward to visiting with you right after the break. We're going to go into more questions, and there's like the 50 most frequently asked questions, and we'll go over that with you.
Looking for your new home? Realty One Group Emerald is your one stop. We are the ones to get you out of your old house and into the new one. Our experienced local real estate agents will simplify the entire process of buying and selling your home. Find your home today at Realty One Group at ROGEmerald.com. 210-405-4326.
Welcome back to the James Duerr Show. I had to run and get some more coffee. Good morning, South Texas. Good morning, the American public. Good morning to everyone out there that wants to improve their financial situation and have money in retirement and have expendable money. Have money that you have safe money, and then your other investments like real estate and stocks, you have that on top of your safe money. So that way you can give back to the community. You can give back to museums, to the church. You can give back to your favorite organization. My favorite organization is Big Bend Foundation or Big Bend Conservancy. You can find them on my website. Great organization to give to, Big Bend National Park. I just want to do a shout out to them. So let's talk a little bit about more questions. And it's interesting how people view life insurance. So we're going to talk a little bit more about life insurance. So this one question is, do I need life insurance? And this starts out not necessarily if you have no children or dependents whom you support financially. Wrong. Okay. Everyone needs to have the 7 steps to financial success, and the first step is term insurance. And you want to have insurance because you never know when you would get married. You never know what happens in life, what happens with the stock market. And you need to have what you call a buffer asset. So people think of life insurance as death. I think of life insurance as life. I want you to use this amazing financial instrument. I want you to call us because we know how to use that, where your money grows tax-free. You take the money out tax-free, and it's creditor protected in the great state of Texas. But if something would happen to you, well, how great would it be that when I died, it would support my favorite charity? So why not have life insurance? When you're young, even if you don't have a family, it's called a hero policy. You're getting a policy on yourself so that your future wife or your future kids or your parents or your siblings, they can receive the death benefit. But more important, again, cash value life insurance is for life. It is for building up tax-free money for your retirement. So a lot of people in college funding, how the typical advisor talks is says, well, okay, let's set up a 529 for your kids for college. Great idea. And you want to do it today. And I had 529s. But you also want, for college funding, you want to use cash value life insurance because you have two parts of it. You have your 529, which is controlled by the government, and you get a penalty if you take that money out and you don't use it for the education for the child. And you have a second part, which is cash value life insurance, which you don't have to use it for college. You can save it for retirement. You can pull it out whenever you want to, for whatever reason you want to. You can access that cash. So you have two parts for college funding. You have 529s, plus you have cash value life insurance policy. And that's what the typical advisor doesn't recommend to you. And we're always going to shoot you straight. I'm a Texas A&M fighting Texas Aggie, and we're going to shoot you straight. I'm an Eagle Scout. I'm somebody who wants to give back to the community and is always giving back. And I want to give back by helping you make smart decisions financially. But you got to call us. We give you a lot of information. I try to give you as much information as I can on this show, but each individual is unique. Each person has unique situations, and things change every year. So, like I said, if you haven't met with your insurance agent lately, you're an orphan, I want to adopt you, you need to call me. Call me on my cell at 361-442-4811, or go to our website, jamesduerr.com, and send us an email. If you don't go to the website, just send me an email at money@jamesduerr.com. That's money, MONEY, at jamesduerr, JAMESDUERR.com. So let's talk a little bit about buffer accounts. That's another thing that people don't talk about for cash value life insurance. So you need another source of money in addition to your 401ks. So before we get into a buffer account, which is a very, very critical piece of your financial security and financial planning, a buffer account, let's shout out to our sponsors. I tell you what, we've selected our sponsors very carefully. We've selected Realty One Group Emerald because of their sophistication, because Patrick Wilbanks at Realty One Group Emerald, he's the reason I'm here today, because he gave me some books on financial, actually on cash value life insurance, which I knew all about. But when I read those books, I realized that those books are trying to push everybody just to have cash value. That's not correct. You need to have, in addition to cash value life insurance, you need to have term, you need to have permanent insurance, you need to have income annuities, you need to have stock market, you need to have real estate, you need to have long-term care insurance, so you can achieve step 7, which is enjoying life. So Realty One Group Emerald, and you can find them on the jamesduerr.com website. They're the reason we're here, because they believe in what we're doing. Even though they sell real estate, they understand that you want to have a mixed portfolio, and you want to have from 5 to 30% of your total assets when you go into retirement needs to be in real estate. And you can trust those guys. But so eventually you're going to buy, some additional houses, rental properties, apartments, or whatever. And you need somebody who's going to keep you out of trouble, who's going to be professional, going to be efficient. And that is Forefront Property Management. And that's Brian Felt over there. And Forefront Property Management, again, just like Realty One Group Emerald, they are on top of the game. They understand the concepts. They understand wealth building. And they understand the Forefront Property Management, understands the legal ease of renting out there. And it's a very litigious environment out there. You need somebody who's going to keep you out of problems and is going to do things efficiently. But the main reason is you don't want to get a call about your real estate holdings at 3 a.m. And they have 24 hours, Forefront Property Management, anywhere in Bexar County, any county that attaches to Bexar County, they'll take care of you on your property management. And the other sponsor I'd like to do a shout out today for is the South San Antonio Chamber of Commerce. They are such a wonderful organization. They're growing leaps and bounds. If you have a business, you need to go to the South San Antonio Chamber and have a visit with them. We have an interview that will run next week with a South San Antonio Chamber of Commerce member, an amazing woman, business owner, and you need to tune in next Saturday and listen to that. And that person's success and business success and personal success is because of the South San Antonio Chamber of Commerce. So please go out and support our sponsors, because that's the reason we can go out here and tell a different story. Most, advisors out there, they're just talking about cash, stocks, bonds, our stocks, bonds, cash, or cash, bond, stock. However they say it, they always say the same thing. They only have 3 mechanisms to make you wealth. And that cash sitting there in the brokerage account is not making anything because of inflation. So you need to make sure in life that you take advantage of time, that you take advantage of that time is your friend, not your enemy. So you need to be real strategic when you have cash laying around. Okay, you need cash for emergencies. You need to have an emergency fund, which is 3 to 6 months of cash that will take care of you if something happens. I don't care how wealthy you are, you have an emergency fund in the bank, and that's the only cash you have that's just sitting there, because it's losing money in inflation. It may be making half a point or a point with the bank, but it's not keeping up with inflation. Oh, the coffee's good. Let's see. Let's go back to a buffer asset. What is a buffer asset? So, you do want to be in the stock market. The stock market, the stock market is your highest risk, highest reward mechanism for building wealth, as is real estate. But you want to have a buffer asset that you can afford to be aggressive in the stock market. So if you have all your money in a 401k, you have all your money in a 403b, you have all your money in stocks and just a brokerage account, then you're at risk in retirement. Because in retirement, it's not necessarily how big a pile of cash you have when you retire. It's about income during retirement, okay? It doesn't matter if you have a big pile of cash if the market goes down or the real estate market goes down. You need to have a buffer asset. And real estate can be a very good buffer asset also. You can always sell a property if the stock market goes down. So a buffer asset is outside the stock market, okay? So it's another bucket of money that's not tied to the stock market. So when the stock market goes down, and I predict the stock market will go down severely within 2 years, it's just a normal cycle. And I think it's not going to be the U.S. economy. I think it's going to be Europe. I think it's going to be the Middle East. I think it's going to be something's going to bring our economy down. It could be next week. It could be in 2 years. But we've had a great bull run over 10 years. And it's just time, and the market will cycle. I guarantee you the market will cycle. So you want to have, like we said before, pigs get fat and hogs get slaughtered. So what you want to do is you want to be able to take some of your money now and put it into a buffer account. Take some of your money off the stock market now and put it into an income annuity with guaranteed income for life. So the buffer account is like a piece of real estate, or it's like cash value life insurance. So when the market goes down, you don't touch the market. You let that, you don't take money out when it's falling, and you don't take money out the next year when it's rebounding, or in several years, because you're going to lose all that income from the stock market. So you want to have a buffer account. You want to have your cash value life insurance that you pull money out when the market goes down, and then you pull money out when the market's going up right after that. And that way you can conserve your stock portfolio. It's been great visiting with you, and this is a James Duerr Show, and I'm your host, James Duerr, and look forward to visiting with you again.